A question I'm often asked is, what is the minimum credit score that I need in order to get pre-approved for a home loan? It really just depends on the type of loan that you're doing. So conventional loans are really the only loan that require a minimum credit score of 620. All of the loans are going to be set by the lender. Government loans like VA, USDA, and FHA don't have a minimum credit score requirement, but the lender does. And the reason why is that the lenders, after the loan closes, have to be able to sell these loans to investors. And if they don't meet certain criteria and they can't get the loan sold, it can be a big problem for the lender. So depending on how big the lender is, how many conduits they have to be able to sell the loan to, will determine what the minimum credit score is. Now, for my company specifically here at Fairway Home Mortgage, we require at least a 600 credit score for VA unless there's compensating factors. We also require a 580 credit score for FHA, again, unless there's compensating factors. USDA is 600 unless there's compensating factors. So the question is, what are compensating factors? It's a multitude of things. It's things that reduce risk. One of the things that the compensating factor is going to be is residual income. There's actually a specific form inside of our system that a loan officer plugs in taxes, childcare expenses, state income taxes, and things like that, which calculates pretty much how much cash flow the person's going to have after they pay all of their expenses. And that's called residual income. And there's a chart that the VA sets that FHA also uses that will determine how much residual income somebody has to have each month based on the size of their family and their expenses. So for example, I might have a chart that has a residual income requirement of $1,000. If we put in all the information and the residual income's over $1,000, then that's a compensating factor because the borrower has more money than is required under that calculation. The other thing that can be considered a compensating factor is a low housing payment. Another one could be length of employment. So you've been at a job for a very long time, that's considered less risky. Debt to income ratio is another one, and not having any late payments over the last 12 to 24 months is another compensating factor. So to answer your question, if you're going conventional, you need at least a 620. If you're going with any other type of loan, it really depends on the lender and their investor.